What's going on, everybody? So in this video, I'm going to talk about the three biggest mistakes for day trading options. So me, I am a scalper. I am a day trader. I don't have any long-term positions that I'm holding. I don't swing long-term. So if you're a long-term investor or if you're a swing trader, holding stocks 1, 2, 3 months out of the year, that's not my forte. That's not what I do. I'm a cash flow scalper. So I'm going to be talking to predominantly people who like to day trade and people who trade options. So I'm going to be going over three, of the biggest mistakes. And these are some of the mistakes that I still currently deal with after trading for just about 5 years now. So you'll never really fully master these, but it's something that you need to focus on and work on each day that you show up to work. And when I mean show up to work, every day you sit in front of the computer or your phone or your laptop or whatever it is that you use to trade, any day that you clock into the stock market, you need to remind yourself and you need to practice this discipline. So the first thing that I'm going to really get in here is having a bias, Having a bias. If you have too strong of a bull or bear bias, this can absolutely crush, and I'm going to give an example in a minute, but this can absolutely crush you from A, missing out on a huge potential trade, which happened to me today, and B, having so much of a bias to where it's your own worst enemy, and it doesn't allow you to let your trades that are winning win, and let your trades that are losing be cut. So what I mean by that is, let's say you're doing your homework, you're doing your research prior day, in the night, maybe it's pre-market, whatever, and you show up to work and you basically, you're looking at the charts, and let's say you have 3 to 4 stocks that you're going to currently be watching. You're looking to trade specific levels on these stocks, and you have a complete long bias. Okay. And let's say pre-market, there's some news headline that comes out. There's some inflation data that comes out. There's some news with the company that comes out, and the technicals break down. It never confirms your long bias for you to actually be able to take the trade. And the stock starts showing you technically on the chart that it is now turned in from a stock that looked good going long to a stock that is setting up and giving you a potential home run trade to the downside. But because you have such a strong bias, your ego or whatever it is doesn't allow you to take that trade. Okay. So this happened to me today on Tesla. So on Tesla, I was really looking for a break over previous day's highs. If we kind of pull up previous day's highs on Tesla here, you can see we got stuffed right into all of this supply. We're looking at the 20-day EMA. We're looking at the 10 moving average. We're currently resting over the 5, and we're looking at this channel line here. So what I was looking for is for Tesla, if Tesla could get over 1070, 1084, which was going to correlate with getting out off of this Bollinger Band, getting away from this 10-day moving average here, kind of clearing out this supply. I was looking for the market to be continue its bounce from what we had a couple of days ago, and I was looking to go long. And the reason I was looking to go long is because if we were able to clean up these sellers, clean up this supply here, there's a lot of room to the upside, pretty much to 1170. I'm not saying that you're going to get that all in one move, but obviously you're going to come into a little bit of supply around the 1090. You're going to come into a little bit of supply around 1115. You're going to come into a little bit of supply at around 1130. But the point is that if this was to clean up this supply, it looked good going long. Now today, starting with the pre-market right off the bell, we touched the key area of resistance on the NASDAQ 100, also with the SPY, and we started to kind of just slowly drift to the rest of the day. And because if I bring up this hour chart here, and kind of just zoom in a little bit, so you can see we got this initial push up, and then we started to fade a little bit in that first right before that first hour before the market opens. And then as the market opens, we started to drift lower. And as I'm watching this, I'm seeing us lose all of these levels of support here. And we break down below the 50 EMA, and then we come down here and we tag on the hourly time frame, the 50 SMA, and then we kind of bounce up. So after that first 30 minutes of the market was open, I was thinking, okay, we came down, we touched the 50 SMA, the bulls stepped in, they bought off of that level. I was thinking maybe we get a little bit of a pop, and we did start to get that pop, came up almost to this sloping down. Okay, this is also another thing you need to keep an eye on. Sloping down 5-day moving average as well as a 10-day moving average. And we kind of got rejected and we started to sell off. So the potential short setup by not having a bias is telling you that pre-market we started to sell off. First 30 minutes of the market open, we started to sell off. We came down here, we tagged this key level of support. So this is telling me here on a technical level, okay, if we were to lose 1040, 1038, this is a potential beautiful short setup. Why? We came down, we tested this level one time, we bounced off of it. Next following hour opens up, and that candle opens up, tries to push higher, gets rejected into supply, and now turns around and starts to fade below this level that we tagged in the first hour candle. This is your confirmation candle here. In this candle here is to tell you the stock is getting weak. As long as we are staying below this 5-day moving average on the hourly time frame, all systems go for a potential short. We get that push to the downside, okay? And then we get a little bit of a pause. These two candles here, a little bit of a pause. We don't break above the previous highs, and we really don't close too much under the lows. So this is telling you this is a little bit of a pause candle, a little bit of indecision candle. The bulls are kind of fighting the bears. They're not really, nobody's winning this battle. But if we take this level out here, we could get a continued flush, and that's exactly what we did. So this would be your entry candle here. As long as we do not close above this level, even if we're doing this here, is still telling you it's okay to be in this trade. It's okay to be in this trade. If you get into this candle, you wait out these candles here, you get your continued downside flush, and we ended up actually coming down to around this 1015. So if you really look at it from the confirmation of, let's say with slippage, 1035, 1030 down to 1015, that's a 15-point move within a matter of an hour, 2 hours time. Continued downward pressure all the way to lows of around 1,000. We came down here and touched this 996, 998 level. This was a beautiful trade. I missed out on it because I had such a bias thinking that we were going to open up, tag this level, come down, start to chop up, and then break out to the top side. So because I had a bias, I missed out on a beautiful setup that would have made a lot of money to the downside. So you cannot have a strong bias when it comes to trading stocks, and especially if you're trading options, you don't want to really miss out on those potential trades. The next mistake that a lot of options traders make is you guys pick options contracts, strike prices that are too far out of the money. Okay, too far out of the money. It could be because maybe you want to trade Tesla, but your account size can't afford Tesla in the money or at the money. So then you pick options contracts that are 20, 30, 40, 50 points, 100 points out of the money. So in the case of Tesla, we could get this move here. Let's say you did not have a bias. You take this short position here. You get this flush. This initial flush here from your entry of 1038 down to these lows is 1032. If you're a scalper and you're at the money or just inside the money, okay, and you get a 5 to 6 point move within 20-30 minutes on Tesla, those options contracts are going to move. So even if this decides to tread here, makes a little bounce, gets rejected, comes back down, closes, right? Now this candle here, right, this candle, so you guys can see it, This candle here closes green and let's say starts to come up a little bit. You could easily cut this trade at either break even or a small win, just in case this trade goes against you too long and now you don't turn it into a losing trade. But if you have an options contract with, let's say, a $1,000 in this range, a $1,000 strike price, and we only come down to, let's say, 1027, and then we start to bounce back up. Well, your options contract is going to be worthless. And then if you start to hold too long, you're going to start losing money, and then you're going to get panicked, and then you're going to hope and wish that it comes back down. It never does. And even though, yeah, you entered this trade properly, you got in, you see your P&L go up, you're actually positive and could have came out with a small win, but because your options contracts were just so far out of the money and then the move bounced or moved against you, you immediately give up those gains. And now you're sitting back hoping and wishing that the stock comes back. And sometimes it never does. Guys, not every trade is going to be a home run trade. Sometimes we have to just take those little small cash flow moves. Okay. So with that being said, stop taking contracts so far out of the money. Okay. Very, very simple. Very, very simple. Last one is going to sound very, very easy, but it's overlooked time and time again. Drop your ego. Okay. Drop your ego. Cut the loser. Drop your ego and cut the loser. Guys, how many times have you entered into a trade? You have a specific level. Maybe it was a level of resistance. We broke through it, kind of faked you out, pulled back in against you. You did not cut the trade. Trade ends up going to zero. Your contracts expire worthless. How many times have you got into a breakout? You get that breakout. You become profitable on the trade. The trade goes against you. It was a fake out. You hold it. You could have cut the loss. You could have cut it at break even, but because your ego and your pride was telling you maybe this is going to bounce back, it continues to fade. How many times has, let's say, $100, $200 loser turned into a $400 or $500 loser? How many times? If you can answer that question and say zero, this video is not for you. Okay. You're a very disciplined trader, and you're probably doing very, very big things when it comes to the trading space. But if you've been in trades before and the trades have gone in your favor and quickly reversed and you didn't cut them, and you're sitting there now telling yourself this trade's going to come back, the chart still looks good. Well, the daily time frame looks good. Well, if you're not playing the daily time frame candles and you're playing, let's say, the 5-minute candles, what does the daily time frame have to do with your options contracts that are expiring, let's say tomorrow, if it never comes back? Now, it might come back and confirm next week, but it does your trade no good on those weekly expiration contracts. So guys, cut the ego, cut the trade. As hard as it is to do, turn off your P&L on your screen. For me personally, I do not look at my P&L. I do not even know how much I make until I exit the trade. And with that reason being is because sometimes when I get into a trade and the trade is in my favor and I go up $100, $200, $300, $400, $500, $600 very, very quickly, I tend to just money grab that as fast as I can, only to just look back 2-3 hours later after the market closed and said, wow, if I would have just stayed in and followed my trading plan and the technicals, I could have, easily doubled my potential on the trade. Or sometimes I get into a trade and immediately starts to go against me. And because I see that red on my screen, I see that negative number on there, and I cut the trade only to look back 1-2 hours later to see it completely bounced off support, which was in my trading plan. And because I couldn't stomach the drawdown, I couldn't stomach that drawdown, I cut the trade, but lo and behold, 1-2 hours later, it bounced off of the level of support perfectly and ended up, my contracts would have been in the money. I've done that time and time again. And I just have realized that with cutting out, looking at the P&L, really allows you to focus on the chart. It allows you to focus on your setup. It allows you to focus on your strategy. And it really allows you to maximize your true potential on the winners. And it really forces you to cut the position when the trade works against you. Sometimes, you could take a smaller loss by just immediately getting out of the trade, but sometimes you do have to let these stocks work a little bit. And even though that means taking a little bit bigger risk, you do have to give them those areas of support. Now, if a stock like Tesla, let's say, would allow you to, on one contract, to be down $500 worth of drawdown, okay, and you can't stomach that because let's say it doesn't bounce off that support and that $500 loss is too much for you, then you're trading stocks that are just too big for you. You need to maybe tone it down a little bit. If you're taking multiple contracts, maybe take one contract. If you're trading Tesla, maybe you should be trading Facebook. If you're trading Facebook and that's too much for you, maybe you should be trading something like AMD or, something that doesn't cost as much. That's not going to swing as much. That's not going to move as much, so you can be able to stomach those drawdowns. So follow the technicals, throw your ego out the door, cut the trade when it's a loser, and turn off your P&L so you can allow those winners to really win. Guys, I hope that helps. Hope I'm helping all you day traders and scalpers out there. If you want more information, join my Discord. That link is down in the description box below. Give me a thumbs up on this video and subscribe to my channel, and I will see you guys all on the next video.